Ind AS 40, investment property. What do you mean by investment property? Investment property is a property held by owner or by lessee as a right of use asset. That means as an ROE asset to earn rentals or for capital appreciation or for both. What is owner occupied property? Owner occupied property is a property held by owner for use or held by lessee as a right of use asset. That means ROE asset. If property is held by owner for use, Ind AS 60 is applicable. If property is held by lessee as a ROE asset, Ind AS 116 is applicable. What are the examples of investment property? Land held for long-term capital appreciation rather than for short-term sale in the ordinary course of business. Next, land held for a currently undetermined future use. If an entity has not determined that it will use the land as owner-occupied property or for short-term sale in the ordinary course of business, the land is regarded as held for capital appreciation. A building owned by the entity or right of use asset, ROE asset, relating to a building held by the entity and the leased out under one or more operating leases. Next, property that is being constructed or developed for future use as investment property. These are the examples of investment property. Next, examples of items that are not investment property and are therefore outside the scope of this standard. Property held for sale in the ordinary course of business. For this, Ind AS 2 is applicable, Ind AS 40 is not applicable. Owner occupied property, for this, Ind AS 16 and Ind AS 116 is applicable, Ind AS 40 is not applicable. Employee occupied property, for this, Ind AS 16 is applicable, Ind AS 40 is not applicable. Owner occupied property awaiting disposal, for this, Ind AS 105 is applicable, Ind AS 40 is not applicable. Next, recognition criteria. Investment property will be recognized as an asset if and only if there are probable future economic benefits and cost can be measured reliably. If both the conditions are satisfied, investment property shall be recognized as an asset. An investment property held by a lessee as a ROE asset, right of use asset, shall be recognized in accordance with Ind AS 116. Measurement of investment property. Initial measurement of investment property. Investment property will be initially measured at cost. Always at cost. What are the components of cost if investment property is purchased, that is owned? That means cost includes purchase price less trade discount and rebates, add non-refundable taxes, add all directly attributable expenses, which includes professional fees for legal services, property transfer taxes, and other transaction cost, but does not include startup cost, operating losses, abnormal wastages in constructing or developing the property. Next, in case of deferred consideration, if payment is deferred beyond normal credit terms, then the cost of investment property will be cash price equivalent at the recognition date. The difference between cash price at recognition date and the total payment is recognized as interest expense over the credit period. Next, if investment property is acquired by way of exchange. In case of exchange of assets, first preference will be given to fair value of asset given up plus cash paid if any, or fair value of asset acquired, whichever is more clearly evident, provided that transaction does not lack commercial substance. Second preference will be given to if fair value is not available or if transaction lacks commercial substance, then recorded carrying amount of the asset given up plus cash paid if any. If transaction lacks commercial substance, is future cash flows, that is risk, timing and amount, are not expected to change as a result of the transaction. That is, cash flows from newly acquired asset are going to be same as the cash flows from the old transferred asset. When the fair value of both the asset given up and acquired is mentioned, it is presumed that both the fair values are equally evident. In such a case, the fair value of the asset given up is considered as the cost of asset purchased. Next, if investment property is held by lessee as a ROE asset, right of use asset, it will be initially measured at its cost in accordance with Ind AS 116. So initial measurement will be done at cost as per Ind AS 116. Next, subsequent measurement. An entity measures subsequently all its investment property at cost. Revaluation model is not permitted for investment property. This standard requires all entities to measure the fair value of investment property for disclosure purpose, even though they are required to follow the cost model. So, a revaluation model is not permitted for investment property, but investment properties fair value should be measured for disclosure purpose. The investment property which subsequently meets the criteria to be classified as held for sale in accordance with Ind AS 105, such properties shall be measured in accordance with Ind AS 105 at fair value less cost to sell. Guidance on fair value measurement for disclosure purpose. Treatment when fair value is not reliably measurable. In case of investment property under construction, entity determines that the fair value is not reliably measurable, but entity expects that the fair value of the property will be reliably measurable when the construction is completed. Then the entity shall measure the fair value of such investment property either when it becomes reliably measurable or construction is completed, whichever is earlier. In case of investment property other than investment property under construction, the entity determines that fair value is not reliably measurable. On continuing basis, the entity shall disclose the following: the description of the investment property, explanation of why fair value cannot be measured reliably, and if possible, the range of estimates within which fair value is likely to lie. An entity that has measured the fair value of investment property under construction may not conclude that fair value of the completed investment property cannot be measured reliably. Subsequent cost incurred. Subsequent cost is of two types: cost of day-to-day servicing, replacement parts. In case of cost of day-to-day servicing, they will be charged to P&L account as expense. In case of replacement part cost, that means cost of replacement parts are capitalized if definition and recognition criteria are met. If definition and recognition criteria are met, then derecognize the old asset and recognize the new asset carrying value. Investment property will be depreciated except in case of land. Land will not be depreciated. Property held for more than one purpose. In case where property is held partly for capital appreciation and are rentals, that is investment property, and partly held for use, owner-occupied property, such property is accounted as follows: property held for more than one purpose. Two parts can be sold separately. If two parts can be sold separately, both the parts are accounted separately. If two parts cannot be sold separately, then check if held for use portion is insignificant. Full property will be accounted for as investment property. If held for use portion is significant, full property will be accounted as owner-occupied property. Ancillary services provided to occupants of a property. In some cases, an entity provides ancillary services to the occupants of the property. Ancillary services, if services provided are insignificant, treated as investment property. If services provided are significant, treated as owner-occupied property. It may be difficult to determine whether ancillary services are so significant that a property does not qualify as investment property. Therefore, judgment is needed in such cases. For example, the owner of an office building provides security and maintenance services to the lessees who occupy the building. In such a case, since the services provided are insignificant, the property will be treated as investment property. If an entity owns and manages a hotel, services provided to guests are significant to the arrangement as a whole. In such a case, an owner-manager hotel is owner-occupied property rather than investment property. Next, property leased to other group members. In some cases, an entity owns property that is leased to its parent or another subsidiary. In case of property leased to other group members in consolidated financial statements, they does not qualify as investment property because the property is owner-occupied. From the perspective of the property is owner-occupied from the perspective of the group. In separate financial statements, the property is treated as investment property, provided a definition is met. Transfer from investment property, transfer to investment property. An entity shall transfer a property to or from investment property only when there is a change in use. A change in use occurs when the property meets or ceases to meet the definition of investment property and there is evidence of the change in use. A change in management's intention for the use of a property does not provide evidence of a change in use. What are the examples of evidence of a change in use? Evidence of a change in use includes commencement of owner occupation or of development with a view to owner occupation for a transfer from investment property to owner occupied property. That means from Ind AS 40 to Ind AS 16. Next, commencement of development with a view to sale for a transfer from investment property to inventories. Transfer from investment property to inventories. That means Ind AS 40 to Ind AS 2. End of owner occupation for a transfer from owner occupied property to investment property. That is Ind AS 16 to Ind AS 40. Inception of an operating lease to another party for a transfer from inventories to investment property. That is Ind AS 2 to Ind AS 40. Transfers between investment property, owner occupied property and inventories do not change the carrying amount of the property transferred and they do not change the cost of the property for measurement or disclosure purposes. Derecognition. Investment property shall be derecognized when it was disposed or no future economic benefits are expected. Gain or loss in case of derecognition. How to calculate gain or loss on derecognition? That is net proceeds less carrying amount. Gain or loss should be transferred to P&L. It should not be classified as revenue. Summary of which Ind AS is applicable to various properties. First one, property owned by a company and leased out under an operating lease. Does it meet the definition of investment property? Answer is yes. So which Ind AS is applicable? Ind AS 40 is applicable. Next, property held as a right to use asset, ROI asset, and leased out under an operating lease. Does it meet the definition of investment property? Answer is yes. Which Ind AS is applicable? Ind AS 40 is applicable. Property held as ROI asset, that is right to use asset, and leased out under finance lease. Does it meet definition of investment property? Answer is no. Which Ind AS is applicable? Ind AS 116 is applicable. Property acquired with a view for development and resale under ordinary course of business. Whether it is an investment property? Answer is no. Which Ind AS is applicable? Ind AS 2 is applicable. Land held for currently undetermined use. Land held for currently undetermined use. Whether definition of investment property is met? Answer is yes. Which Ind AS is applicable? Ind AS 40 is applicable. Property occupied by employees paying rent at less than market rate. Whether definition of investment property is met? Answer is no. Which Ind AS is applicable? Ind AS 16 is applicable. Investment property held for sale. Whether definition of investment property is met? Answer is no. Which Ind AS is applicable? Ind AS 105 is applicable as investment property asset is held for sale.